All right, get ready because today we're going to take a deep dive into the world of ultra-high yield dividend stocks.
Oh,
We're specifically going to be looking at a strategy for potential investment in 2025.
oh,
And it's all based on this article titled, Why I'm Buying These Three Ultra High Yield Dividend Stocks Hand Over Fist for 2025.
mm,
And what's really interesting is that the author of this article isn't even an income investor right now.
oh, wow.
They're looking ahead to retirement and kind of using that lens to view this through.
Interesting.
So the three companies that have caught this author's eye are Enbridge,
Okay,
Energy Transfer,
Mm.
and Enterprise Products Partners.
gotcha.
And these all operate in what's called the midstream energy sector, which,
Right.
maybe not everybody's super familiar with that term.
Yeah, no, not everyone knows about midstream.
So essentially,
that?
they're the link between energy production and us, the consumer.
Exactly.
So they handle things like the transportation and storage of oil and natural gas.
Yeah, so think about it like this. You got oil and gas flowing through these massive pipelines,
Yeah.
stored in these huge tanks.
Right.
And then it makes its way to, power your car or heat your home.
Gotcha. So these companies are kind of the middlemen and all that.
Exactly. That's a great way to put it.
And the author is particularly interested in them because of these dividend yields.
Oh, yeah. Those yields are impressive.
They're pretty incredible. We're talking like 6.5% for Enbridge,
Wow.
6.9% for Energy Transfer,
Mhm.
and then 6.7% for Enterprise Products Partners.
Those are some serious numbers.
Yeah, so just imagine the passive income potential there.
It's huge.
And it's interesting because the author isn't just focused on, oh, I hope the stock price goes up.
Mm.
They're actually focused on what's called total return.
Yeah, total return is key here.
So can you break that down for us? Like, what does that actually mean?
So total return basically means you're looking at both the share price appreciation,
Okay.
but also the income that you're generating from those dividends.
So it's not just about the stock going up. It's about the combination of the growth and the dividends you're getting.
Exactly. And, especially when you think about it long term,
Right.
the power of compounding over time with those dividends
Yeah.
it's pretty significant.
Yeah, for sure. Now, another kind of layer to this whole strategy is the author's belief that political changes coming up in 2025.
Oh, yeah.
Specifically, they talk about this, drill baby drill approach.
Right. A big push for more drilling.
Yeah, and they think that's going to create this really favorable environment for these midstream companies. Interesting. So help me out here. If there's this big push for more drilling, wouldn't that mean more oil and gas supply?
It would.
Which could potentially drive prices down. Wouldn't that hurt these companies?
That's a really good question. And it's something a lot of people kind of misunderstand about this. Because, increased production might impact the companies that are actually extracting the oil and gas. But the midstream companies are kind of playing a different game.
Gotcha.
They're not as directly tied to those price fluctuations.
Okay, so how do they make their money then if it's not really tied to the price of oil and gas?
Well, the author uses this really great analogy to explain it.
Okay, I'm intrigued.
They compare midstream companies to toll roads.
Okay, a toll road.
Yeah, think about it this way.
All right.
You've got all these different vehicles driving down the toll road.
Mm-hmm.
Doesn't matter if it's like a fancy new electric car
Right.
or some old beat-up truck. They all got to pay that toll to use the road.
That's true.
So it doesn't really matter to the toll booth operator what kind of car it is
Yeah,
or even how much gas costs, as long as people are still driving on that road.
I get it. They're still collecting that toll no matter what.
Exactly. And it's the same principle for these midstream companies.
Oh, okay.
Whether oil prices are super high or super low, they're still getting paid to transport and store all those resources.
So they're kind of insulated from all that crazy volatility that you see in the energy sector.
Exactly. And that's one of the things that makes them attractive to investors.
Especially those who are thinking about retirement and wanting something stable.
Yeah, exactly. Long-term stable income.
Now, we can't ignore the big elephant in the room here,
What's that?
which is the rise of renewable energy.
Oh, right.
How does all this fit in with the global push for solar and wind and all these other clean energy sources?
Yeah, that's the big question, isn't it?
Right. How does this drill, baby drill idea and all these oil and gas investments,
Mm-hmm.
how does that fit into a world that's increasingly moving towards sustainability?
It's tricky.
Yeah. Is it just like a temporary bump in the road
Right.
on the way to this renewable energy future?
Mm-hmm.
Or is this a sign that fossil fuels are going to be around for a lot longer than some people think?
Well, the author cites some interesting data here from the U.S. Energy Information Administration. And they actually project that U.S. oil production could keep increasing all the way through 2050,
Wow.
even as renewables grow.
So we're talking decades here, not just a few years.
Exactly. It's a long-term projection.
And to bring it back to like the individual investor,
Yeah.
the author points out that if you invested $100,000 in each of these stocks at current rates,
Okay.
that could generate over $20,000 a year in income.
Wow, that's a lot.
And then imagine that compounding year after year in your retirement.
It adds up fast.
That's the kind of long-term wealth these high-yield stocks could potentially help build.
Absolutely. It's a powerful strategy.
But of course, there's two sides to every coin here.
Oh, for sure.
We got to look at the risks, too.
Definitely.
So let's talk about those. What are some of the potential downsides or red flags?
Well, I think one of the biggest things to consider is, even though the author seems pretty confident about this drill baby drill approach,
Right.
it might not actually be sustainable over the long term. I mean, the global push for clean energy is only getting stronger.
Yeah, that's true.
And government policies could shift pretty dramatically in favor of renewables.
So potentially, these companies with all their pipelines and infrastructure
Yeah.
could get left behind if the world suddenly shifts away from oil and gas.
That's the worry.
And what about those projections from the Energy Information Administration? They seem to be banking on oil and gas still being a big part of the mix, even in 2050.
Right.
Are those projections like set in stone, or could things change?
Well, you have to remember, projections are just projections.
Right.
They're based on assumptions about all sorts of things.
Like what kind of assumptions?
Well, technological advancements,
Okay.
economic growth, global energy demand.
Gotcha.
And, if those assumptions turn out to be wrong,
Yeah.
the projections could be way off.
So there's a gamble involved here,
Definitely.
especially if you're thinking decades ahead like the author is.
Oh, that's...
So it sounds like we've got this intriguing potential for high returns, but we've also got some pretty big question marks hanging over the future of oil and gas.
Yeah, it's a balancing act for sure.
So what's the takeaway for our listeners? If someone's intrigued by these companies, what should they do?
Well, the first thing is do your own research.
Okay.
Don't just take the author's word for it,
Yeah.
or even mine.
Right.
Dig deeper into these companies, understand their business models, and really consider the potential risks.
Don't just jump on the bandwagon because of those tempting dividend yields.
Exactly. Got to be smart about it.
It's about making informed decisions, right?
100%. And remember, diversification is key.
Right. Don't put all your eggs in one basket.
Exactly. Spread your investments around.
So don't just limit yourself to these energy companies. Explore other options as well.
Right. There's a whole world of investments out there.
And I think it's important to align your investments with your own personal financial goals and risk tolerance, right?
Absolutely. It's got to be the right fit for you.
Like, how comfortable are you with the potential ups and downs that come with this sector? Are you looking for short-term gain or long-term stable income?
It all depends on your individual needs and goals.
No one-size-fits-all answer here.
Nope. Got to find what works for you.
Now, before we move on,
Okay.
I want to go back to something the author mentioned about not being an income investor right now, but planning to become one in the future for retirement.
Interesting point.
And I think this raises a good question for our listener.
What's that?
Like, when the right time to switch from a growth-focused investment strategy to one that's more about generating income?
Yeah, how do you make that transition?
And how do you do it smoothly so you have that steady income stream in retirement?
That's something a lot of people probably wonder about.
Yeah, for sure.
It's a tough question, and there's no easy answer.
Right.
It really depends on your individual circumstances,
Okay.
risk tolerance, and retirement goals.
So it's not a one-size-fits-all kind of thing,
Definitely not.
but it's something worth thinking about.
Absolutely.
Especially if you're like the author and you're looking ahead to retirement and wondering how to best position your investments.
It's all about planning for the future.
Right. How do you make sure your investments are working for you both today and in the future?
That's the key.
These are important questions.
Very important. Yeah, it's all about making sure you got that long-term plan in place.
So these midstream companies with all their pipelines and all this infrastructure, they could be left high and dry if the world suddenly says, nope, we're done with oil and gas.
That's the risk. You end up with these things called stranded assets.
Stranded assets, what does that mean?
Basically, it means you've got all this infrastructure that's just not economically viable anymore.
Oh, so it's just sitting there useless.
Pretty much.
And what about those projections we talked about from the Energy Information Administration? They seem pretty confident that oil and gas are going to be around for a while.
Right. Even out to 2050.
But are those projections, are they set in stone? Or could things change?
Well, you got to remember, projections are just that, projections.
Uh-huh.
They're based on all sorts of assumptions.
Right, we talked about that.
About technology, economic growth, energy demand, all that stuff.
And if those assumptions are wrong...
well, then the projections could be way off.
So there's definitely a gamble here.
There's always a gamble in investing.
Especially when you're thinking long-term like this.
Oh, yeah. Decades out.
So, okay, we've got this potential for these high returns with these dividend-paying companies.
Mm-hmm.
But we've also got some pretty big unknowns about the future of oil and gas.
It's a tough call.
What's the takeaway for our listener then? If someone's thinking, hey, these companies sound interesting, what should they do?
Do your research. That's the biggest thing.
Okay, research.
Don't just take the author's word for it.
Right, or even yours.
Exactly. You got to dig in yourself, look at the financial,
Mm-hmm.
really understand how these companies work,
Okay.
and think about those risks we talked about.
So don't get blinded by those big dividend yields.
Don't chase those yields blindly. There's always more to the story.
Got to make informed decisions right.
Absolutely. And remember what we said about diversification.
Right. Don't put all your eggs in one basket.
Spread the risk around.
So don't limit yourself to just these energy companies.
Nope. Look at other options too.
There's a whole world of investments out there.
That's right. Stocks, bonds, real estate, you name it.
And I think it's really important to align your investments with your own personal goals.
Right? Yeah, your goals and your risk tolerance.
Like, how comfortable are you with things going up and down in the market?
Some people can handle a lot of volatility, others can't.
And are you looking for quick profits or that slow and steady income?
It all depends on what you're trying to achieve.
So no easy answers here.
Nope. It's all about finding what works best for you.
Now, there's another aspect to this whole discussion that I think we should bring up.
Okay, what's that?
Well, the author is really focused on the financial side of things.
Makes sense. It's an investing article.
Right. They're talking about those dividends and building wealth for retirement,
Mm-hmm.
but they don't really get into the environmental impact of all this drilling.
That's a good point. It's the other side of the coin.
Exactly. Like, what about the environmental consequences of all this oil and gas production?
Yeah, it's a big issue.
Increased reliance on fossil fuels, it definitely has an impact.
Greenhouse gases, climate change, all that.
So it feels like there's this tension here.
There's everything in tension.
On one hand, we want to plan for a comfortable retirement.
Yeah, financial security is important.
But are we potentially hurting the planet in the process?
It's a tough question to grapple with.
Are we being short-sighted by focusing on these short-term financial gains and ignoring the long-term consequences for the environment?
It's a balancing act, for sure.
So it's not just about the numbers, right?
Nope. It's about values, too.
There's this whole ethical dimension to consider.
Absolutely. You got to think about what you're comfortable supporting with your investments.
So where do we go from here? We've got the financial side, we've got the ethical considerations. What else should we be thinking about as we're weighing the pros and cons of these energy stocks?
Well, remember, the author is focused on these three specific companies.
Enbridge, Energy Transfer, and Enterprise Products Partners.
Right, but those are just three companies in a whole big sector.
So there might be other companies out there that are worth looking at.
Oh, definitely. Maybe even ones that better align with an investor's specific goals.
Okay, so don't just fixate on these three.
Exactly. Do your research, explore different options.
It's all about finding the right fit for you.
That's the key, right?
And remember, the midstream sector is just one part of this whole big energy picture.
There's a lot more to it than just these companies.
So we got to keep the big picture in mind.
Absolutely. Understand how all the pieces fit together.
Now, before we move on, I want to circle back to something the author mentioned. They talked about not being an income investor right now.
Right. They're focused on growth for now.
But they're planning to switch to an income focus later on for retirement.
Interesting strategy.
And this brings up an important question for our listener.
What's that?
When was the right time to make that switch from growth to income?
Yeah, that's a big decision.
How do you know when you're ready to make that move?
It's not always clear cut.
And how do you do it smoothly so you've got that steady stream of income coming in during retirement?
It's all about planning and timing.
It's something a lot of people probably struggle with.
I'm sure they do. It's a complex issue.
So how do you start planning for that transition?
That's where a good financial advisor can come in handy.
Right, someone to help you figure it all out.
Exactly. Because you want to make sure your investments are working for you.
Both now and in the future.
That's the goal, right?
Yep.
Long-term financial security.
So important to think about these things.
Absolutely. Got to plan ahead.
Yeah.
Yeah, it's all about having that plan and knowing where you're headed.
So we've covered a lot of ground today.
Well, yeah.
We talked about those really attractive high yields and all the potential risks that come with those and you know, the politics and the environmental factors involved.
Yeah. It's a complicated picture.
And of course that whole idea of aligning your investments with your values.
Really important.
So where do we go from here?
Well,
what's the takeaway for our listener?
I think, you know, if this author's prediction about oil and gas being around till 2050,
right,
if that turns out to be true, it really makes you think about, you know, what that means for your own investing.
Yeah.
It's a balancing act.
For sure.
You got these potential short-term gains, but also those long-term risks.
Right.
And then you got to factor in, you know, how you feel about it ethically.
It's not just about the numbers.
No, it's not.
It's a lot to think about.
It is.
So what do you suggest? Like, what should our listeners do?
Well, I think the biggest thing is just, you know, keep learning. Do your research.
Right.
Figure out what makes sense for you.
Don't just follow someone else's advice blindly.
Exactly.
Got to make your own informed decisions.
That's the key takeaway.
I love that.
And remember, the world of investing is constantly changing.
Oh.
So you got to stay curious. You got to stay informed.
Stay ahead of the game.
Yeah.
Well said. Well, we've given our listeners a lot to chew on today.
We have.
Ultimately, the decisions are theirs.
Right.
Do your research, weigh your options, and invest wisely.
Couldn't have said it better myself.
Until next time.
See you then.